I just used the bullish order block strategy and I believe it's working. So I'm going to show you guys the setup and everything on the chart. Alright people, so this is the setup. First thing I look for or notice was that the market is going in an uptrend, right? So the market is bullish. Get me? So we have higher highs and higher highs. So this is a high high and this is a higher low. As a beginner trader, the first thing I look out for was highs and lows. So higher highs and higher lows. So right here is the higher high, right at this point, and here's the higher low, right? That's the first thing. Next thing, in the bullish scenario, we have to look out for where the higher low, where the higher low gets broken, or where the market basically shift, the market shift. So right here's the higher low, right? You guys see that right here's the higher low. I will notice right here the market shift. So there's a market shift right here. This market shift tells us there's a potential trend change. The uptrend is done and now the market is going in a downtrend. After spotting the market shift, you'll want to look out for the inefficiency. The inefficiency is the gap in the market. So I'm going to show you guys that. Alright, so right here is the inefficiency. The rule for inefficiency or gap is the previous candle, which is this blue candle right here. That previous candle does not overlap with the second candle, right? So right here, so from here, so from this, the low of this candle to the high of this candle does not overlap. So if you should draw a line from here and a line from here, right in this middle here is the gap, or what we call the inefficiency. So once you spot your inefficiency, that means this candle, you can draw a rectangle from the high of this candle and low of this candle and draw it across. That's your order block. So you want to wait for price to go back up to the order block to fill up the inefficiency. So I'm going to show you that. Alright, so price did went back up right here. Price did went back up right here. Once you see price does that, then you can put your stop loss above the order block and your take profit anywhere to the maybe the lowest, the lower low. So we put this at the lower low, or maybe even to here. So you draw it down to here, and then you just wait. And as you can see, market did went to that direction and hit TP. So right there you would have gained some money right there. I'm still learning, so this is all demo accounts and stuff. So I'm not in the live market. As you can see, this is gold. I'm on the market for gold. I'm trading gold right here in this market, right? So yeah, you guys tell me what you think. Did spot another order block, and this time I'm using the bearish strategy, so I'm gonna show you guys that one as well. Alright, so in a downtrend, price are creating lower low and lower high. So the market was basically, first it was in an uptrend, right? And then we noticed this was the high, and maybe like right here was the low. Then it break here and create a low here, then it break again, create a low here, break here and create a low. So right here would be the lower low, right here would be like the lower high. After that, we want to wait for a market shift. So for the market shift to happen, we have to wait for price to push past the lower high. So price has to go back and push past the lower high. So I'm going to show you guys that. So if here is the lower high, right? Here's the lower high. If we draw a line, all right, let me draw a line. Right there. So this was a lower high, and we notice price actually break this lower high. So this is the market shift. This is a market shift. I told you guys, in order to draw your order block, first you have to ensure that the candle before the shift, right, or before the latch move, so this candle is not overlapping with this one. And right here, I can see that there's no overlap. There's a small gap. It's not big, but there's a small gap right there. So here, right here, that's where we draw our order block rectangle, and it's draw it across the screen. After drawing your order block, right, and you wait for the market shift, the next thing you want to wait for is for price to go back down and touch your order block, right, to mitigate the inefficiency that's there in the market, or to fill up the gap that was there. I'm going to show you guys that in the market right now. Alright, so as I told you, wait after the market shift right here, you wait for price to go back down, and price did went back down to our order block. So right here you could place your stop loss. Let me show you. You could place your stop loss below your order block, so you could maybe place it from here. I didn't enter this trade or anything, but I'm just learning as a beginner, so I'm just spot this one and just actually wanted to show you guys. So I wouldn't play, if I was going into the trade, I would place it about my take profit about here, right there, and my stop loss would be about here, right outside the order block zone. So it would look something like this. And if you realize price actually went all the way up to this level, so I know most person that traded on this day and actually spotted this order block did make a nice profit. Alright guys, so you saw both bullish scenario and bearish scenario of order blocks. I'm still learning. I'm a beginner trader. I've been learning trading for like the past 2 weeks. So this is what I learned so far. So leave your thoughts in the comment section. Leave the tips as well. Even if there's a criticism, you can always leave it as well. Remember to like, share, subscribe to my YouTube channel for more bangers like these.